Credit Suisse is a Swiss multinational investment bank and financial services company that was founded in 1856. Unfortunately, in recent years, Credit Suisse has faced a series of scandals and controversies that have led to a loss of trust from its clients, investors, and regulators. Archegos Capital Management. In March 2021, the family office of Bill Hwang, Archegos Capital Management, was forced to sell billions of dollars worth of stocks after its highly leveraged positions in several companies unwound. Credit Suisse was one of the banks that had extended margin loans to Archegos, which led to a loss of over $5 billion for the bank. The scandal exposed serious risk management failures at Credit Suisse, which had also been involved in similar high-risk transactions in the past. Greensill Capital. Greensill Capital was a financial firm that specialized in supply chain finance and had several high-profile clients, including Nissan, Vodafone, and SoftBank. Credit Suisse had invested heavily in Greensill's funds, which were marketed as safe and low-risk. However, when Greensill's business model came under scrutiny, it was revealed that the company had taken on significant risks and had relied heavily on a small number of clients for funding. This led to Credit Suisse facing billions of dollars in losses when the funds were suspended and ultimately collapsed. Spying scandal. In 2019, it was revealed that Credit Suisse had hired private investigators to spy on one of its former executives, Iqbal Khan. Khan had left the bank to join its rival, UBS, and Credit Suisse was concerned that he might poach its clients. The spying scandal led to a criminal investigation by Swiss authorities and a fine of 30 million Swiss francs for the bank. It also raised serious questions about the culture and governance of the bank. Tax evasion. In 2014, Credit Suisse was fined $2.6 billion by US authorities for helping American clients evade taxes. The bank was accused of setting up offshore accounts and using other methods to help clients hide their wealth from US tax authorities. The scandal led to a public outcry and a loss of trust in the bank's ethics and integrity. FIFA corruption. In 2015, Credit Suisse was implicated in the FIFA corruption scandal. The bank was accused of facilitating the transfer of funds between FIFA officials and other parties involved in the corruption scheme. The scandal highlighted the bank's lax anti-money laundering controls and led to calls for greater regulation of the financial services industry. Mozambique loan scandal. In 2016, Credit Suisse was involved in a scandal related to $2 billion in loans made to Mozambique. The loans were intended to fund projects related to maritime security and fishing, but instead, the money was allegedly used to buy military equipment and luxury goods. The scandal led to arrests and criminal investigations in Mozambique and Switzerland and raised questions about the bank's due diligence and risk management practices. These scandals have not only led to significant financial losses for Credit Suisse but have also undermined the trust of its clients, investors, and regulators. As a result, the bank had little choice but to accept a marriage of convenience with its nearest neighbor for a sliver of what the 166-year-old institution was worth in its heyday. Koerner and the rest of the Credit Suisse management team were marginalized as emergency weekend talks, led by Swiss National Bank President Thomas Jordan, to sell the group to UBS gathered pace. UBS is paying $3 billion to buy its rival, the report said, citing sources who are privy to the matter. The all-share deal has priced Credit Suisse at around one-fourth of its closing price at the end of the trading session on March 17, when the lender valued at about $8 billion. Biggest losers. Saudi Crown Prince Mohammed bin Salman directed government-backed Saudi National Bank to make a $1.5 billion investment in Credit Suisse, which went down to 53%. Now, the Saudi investment is almost wiped out after Credit Suisse's emergency merger with UBS Group AG. Credit Suisse's meltdown also erased billions of dollars in investments made by Qatar's sovereign fund and the Saudi-based Olayan family, making the Persian Gulf one of the biggest losers from a slide in financial stocks since the collapse of two US banks, Silicon Valley and New York's Signature Bank last week. The merger creates significant overlaps. The two lenders together employed almost 125,000 people at the end of last year, with about 30% of the total in Switzerland. Regulatory changes since the global financial crisis have created new bail-in regimes across all major markets that carefully determines what can happen to subordinated bondholders in the event of a bank failure. In the Credit Suisse case, bondholders are helping to bail out shareholders. Equity investors are getting about $3.2 billion of value, while equity-like capital bondholders get zero. The Swiss regulator is crossing a Rubicon here by foreclosing on this cornerstone of the capital structure of banks. While the bond prospectuses clearly laid out the risks to investors, that doesn't soothe the shockwave. The world of bank capitalization is about to become a lot more volatile.